Is the Orlando housing market about to crash in 2026? Or is it actually the best buying opportunity that we've seen in years? If you're thinking about buying, selling, or investing in Central Florida, what happens next could cost you or make you tens of thousands of dollars. Let's break down exactly what's happening with real data, real trends, and what it means for you. Hi, I'm real estate broker and real estate attorney David Dowell. I'm located here in the Orlando area, and I've been helping people to relocate here for many years now. And today we're going to talk about the Orlando housing market. So let's start off with where we are right now. The Orlando housing market has shifted. There's no question about it. Inventory is up. Buyer demand has cooled slightly. Homes are sitting on the market a bit longer now, and price growth definitely has slowed down. But here's the key: we are not in a crash, we're in a normalization phase. After years of what I call crazy growth here in Orlando, the market is finally returning to something more balanced, more normal. In 2026, here's what we expect for home prices throughout Orlando and the Central Florida area. We believe that the prices are going to likely stay flat or grow just modestly, like a 0 to 4% growth. We expect some neighborhoods may even see some slight declines. Others, especially around the Walt Disney World Resort, like Lake Nona, Winter Garden, Windermere, we think those are going to still stay strong. But the days of 15 to 20% appreciation are definitely over. But a major crash? Highly unlikely. Most homeowners locked in low interest rates, so they're not forced to sell. That's a really big deal. Now, talking about inventory and supply, one of the biggest shifts heading into 2026 is inventory. How much housing is there on the market for sale? We're seeing quite a bit more homes hitting the market. We're seeing new construction is still very, very active, and there's fewer bidding wars. So this means that buyers finally have options again. But here's the twist: even with more inventory, we're still not oversupplied enough for a crash. So we're in a really good spot. Now, interest rates obviously have an impact, right? Interest rates are the biggest wild card in 2026. But if rates do drop, we believe that the buyer demand is going to surge. Prices will go up. Now, if rates stay high, market will stay slower, and buyers will gain a little bit of negotiating power. But most experts do expect that the rates are gradually going to ease, not drop dramatically, but just drop slowly. So, timing the market perfectly, that's nearly impossible. But understanding the direction, that's where the opportunity is. So, why people keep moving to Orlando? We're often asked. Well, here's why Orlando is still one of the strongest markets in the entire United States. We have no individual personal state income tax. That's big. We have great job growth, especially the tech and the healthcare sectors. We have a massive population growth, many, many people moving down from high tax states in the Northeast. And of course, it's our lifestyle here. But people are still moving here every single day from all over the country. And that demand puts a floor on home prices. So we're pretty well protected here in Orlando. Now, there are risks to watch. So let's be real. There are risks, guys. The insurance costs are rising, and I'm referring to homeowners insurance. They've been going up for a few years, and it looks like they're still going to keep going up a bit. It's even worse if you're on the coast, actually, because of the hurricane risk. But even here in Central Florida, these costs are rising. Property taxes are increasing, even though there's rumors that the governor wants to axe those property taxes permanently. But right now, they exist and they're increasing. Short-term rental regulations are changing, and there are affordability challenges. Houses are getting more expensive. So these could slow the market. but not collapse it. So, what does this mean for buyers? Well, if you're a buyer in 2026, this might be your window. There's less competition, there's more negotiating power, and there's potential price stability. So, the strategy, I would say buy now and refinance later if rates drop. Remember, if you're waiting for the rates to drop, then if and when they do, prices on the homes are probably going to go up right away. So think about it. Buy now, refinance later. Now, what does this mean for sellers? Well, if you're selling or you want to sell, you can still win, but you need a strategy. Pricing matters more than ever. Pricing is very, very sensitive in this market. Presentation is critical. Marketing is everything, basically. The days of list it and it sells in a weekend are gone. Now, houses absolutely are still selling here in Central Florida, but you got to price it right, present it right, and you just got to have the right marketing strategy. It will sell. So, really, as a final prediction, here's the bottom line for me. For the Orlando housing market in 2026, there will be no crash. There will be slower growth, but still growth. There will be a more balanced market for buyers and sellers. And the opportunities for smart buyers and sellers are going to exist. Once again, this is a shift, not a crash. Look, guys, if you're thinking about buying or selling in Orlando, the strategy used in this market matters more than ever. If you need any help, you got any questions, feel free to reach out to me. Phone, text, email, and we'll have a conversation about what's right for you. Thank you for joining me, and have a fantastic day.